Well, hello folks, I'm L.A. Little and this is today's, not today's 1 minute trade. Let me start over. Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. We talk about these markets, we look at them from a neoclassical perspective, and each time we ask ourselves what happened today and what does it tell us about the coming days. You know, I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube. You can ask questions in this show and I actually encourage it. 303-912-9110 is the text. Text me there, support@tatoday.com if you want to send an email, or if you're logged into live stream you can just click on the what do you want to call that, the chat window maybe is the best word for it, and enter in your questions there and I'll try to answer them. I have a couple already queued up, so we'll get to those in a bit. But before we do that, let's take a look at what happened today. So last night we were talking about I would expect that we try to see some softness today. In particular in the NASDAQ and the NDX, it was starting to form, and the Russell actually gave us a reversal signal last night. And lo and behold, that is what tried to happen, but then the industrials and the S&P would not play along. So we were pretty much flat on the composite and here on the NDX, almost flat. Russell did pull back as it should have, but you did have some continued strength here in the S&P and in the Dow Jones. So 1/4% higher there, flat, 0.5% down. Tonight you actually have some more reversals, and I suspect tomorrow you're going to actually see that weakness spread, and we'll get to that here in a second. Gold down another 1/3%. Silver is trying to stop the bleeding, pretty much flat today. Copper got a big spike up. Copper stocks followed. That comes after, you know, a continued push down in the copper market. It was up 2.5% today. The big news today, of course, was the Fed minutes. The Federal Reserve came out, released their minutes. There was talk about the exit strategy. There was talk that the labor market was improving, and this is from the last meeting. There was talk about the labor market improving at a faster rate than was expected. All of that, if you take it in the context of the way it was said, is suggesting that maybe the Fed is starting to feel that maybe they're a little bit behind the curve. That, of course, put power into the dollar again. Dollar breaks out. And the euro, although I don't have it on these boards, the euro totally demolished today. The bottom just totally drops out of that one. So let's pop over and look at some of these charts and see what we got here. So let's start off actually with the dollar and the euro. I'll start with the dollar chart, and the reason for looking at these is that, you know, fast moves in currencies, if they happen, and in bonds as well, can lead to significant moves in the markets. And the reason for that is these markets are huge compared to the stock market. If we go to the weekly here on the UUP, which we're using as a proxy for the dollar, swing point high is 21.85. Today we're up at 21.83. We're going to hit that probably before the week is out. Wouldn't be surprised we hit it tomorrow. There's a zone there. That zone really is in between these two. And even though it's not the more significant zones, because those are up here in the red, they nevertheless are, you know, if you understand the neoclassical thought, and if you read my books, you'll know that those two swing point highs, when conjoined, gives you a zone. And the only reason they don't stand out as significant is these over here that are going to fall off in a couple of weeks are both wide price spread, high volume type bars, these two. And you actually have a swing point high here, and that's why you get the heavier weighting on these bars, even though they're farther away from price. So coming back to the story here, swing point highs, what it's going for, you can see there's no volume that's going there. probably going to fail when it gets there, right, into this zone, and pull back. Going back to the daily now, it is a breakout. Suspect, but a breakout. If you have a suspect breakout, the tendency is that this thing's going to come back in faster than if it's confirmed. More than likely about 80% of the time. So you can expect this to come back in and do a retest regen off that high. That high has decent volume on it, and you've got a nice spike high right here supporting it. So I would not be surprised to see this come up, back down, test, and then regenerate higher and try to, you know, do a large structure to the upside and actually get a B point here on this ABCD structure, which still doesn't have a B point. And so right now we're up here, there's no B point yet. So once we get a B point, then we can measure how far it wants to go. If you look over at where support is, it wouldn't be surprising to see the B point show up about there. And it just so happens it's going to take you right back up into a resistance zone as shown by the red that I just overdrew. So dollar looking strong. Okay, if that moves relatively fast, that could lead to faster moves in the equity markets. So far, the angle of ascent is not that bad and is actually kind of, you know, rolled over here at the end. So this right now, not a problem. If it starts to shoot straight up, you know, if we start to see, instead of a 45-degree angle, some sort of a parabolic type angle, you know, then it becomes problematic. That's the dollar. And if we go over and look at the euro right quick, euro, of course, the opposite. Euro just totally demolished, actually the last 2 days, but especially today. Volume comes out of it, you know, expanding down. It's still not huge volume, but now it's broken another swing point low. If it stays under that one, that turns the intermediate term trend bearish and actually starts shooting for the next support zone, which is this low and happens to correspond with the high of this wide price spread volume low over here. So this looks to be shooting for that area. Remember, this had already had a break. It should extend 2 to 3 bars lower. That's exactly what it's doing. It was multiple swing points breaking. You broke here. You also broke on the daily when you did that. That was the multiple swing points. Should get 2 to 3 bars. 1, 2, 3, and now you're getting bonus bars, right, as this thing escalates to the downside. ABCD structure, it's over now. That one's already been met. So it could pop back up at any time. But the way it's coming down, the way the volume's starting to expand, it looks like it's going to get even deeper. Again, escalates fast, becomes a problem. So that's something we'll be watching. Let's pop back over now after covering those. Let's go back to the equity markets because we need to talk about the 2-bar reversals that took place today. Now, it wasn't, of course, on the Dow and it wasn't on the S&P because those guys just skied on up, right? And the Dow, the only thing it did was come into the lows of the highs. Wide price spread, high volume bar there, doesn't have the volume as it's coming into it. Did stay in it, so it's not technically a failure, but that is the last really significant resistance before you get to the highs. That's the Dow. If you look at the S&Ps, also no failure. This one goes up but doesn't get to the highs. Highs got 32.2, you got 27.8 coming into it. You don't have the volume. You didn't get to the high though. I wouldn't be surprised to see this thing try to clip the high tomorrow because it's there. 91.39, you got as high as 88.57. Extended beyond belief again, and this is, you know, when I was talking about the angle a while ago of ascent, look at this angle of ascent. That's not sustainable, folks, right? 45 degrees can be sustained. You know, Gann talked about all these things, you know, some 70 years ago. This can be sustained. This, not sustainable. It will pull back, and it will pull back in a rather vicious manner when it does, but this thing is going to come back at some point, and that point just may be tomorrow, and that's not because of it, but because of these, the IXIC, which is the NASDAQ composite. Again, look at your angle of ascent, right? Rather steep. That type of an angle is not a good angle. The fact that you've tacked on a rather large percentage in a very short period of time makes it susceptible to a pullback. That pullback now looks like it's going to take place. That's a 5% move in what, 2 weeks? That's fairly steep for a broad index, right? If you take the beta of this index and then you look at the extent of this move compared to that beta, that's a fast move to the upside, right? On an ascent that doesn't make sense. What does it do today? It gets over 45.2891, less volume, gets over the top, closes back up underneath it. That's a failure. It's a 2-bar reversal because you had the serious ascent, right? That makes it a 2-bar reversal. This thing's going to pull back. It's already bar 2 now of the 2 to 3 bars extension that should have happened as a result of the break of multiple swing point highs. And what should we expect now? Well, we should expect it to come back in and retest, regenerate off those highs if in fact it's going to go higher. So we expect something like this to take it on up if in fact that's where it wants to go. Of course, we don't know that yet. We'll have to see how it comes back in and what it does when it gets here. But given the angle of ascent, given the fact that this whole market remains bullish, that hasn't changed, given all of that, you would think there's a good chance that when it gets back here, it's going to go right back the other way. That's the pullback that looks like it's in place. The NDX did the exact same thing, over, back under, less volume. If we pop over to the Russell. Now the Russell, remember, gave us a signal last night that it wanted to pull back, and the signal was as it went into this area, it got over this swing point high, but did not have the volume. That's a test failure into a swing point high. So you try to get over it, you get back underneath it, so you go over it, you get back underneath it, you close under it, you have less volume. That says the next bar should bring you back. That's what it did. Not much, but yes, some. That was the reversal sign last night that gave us a clue that we may see some sort of a reversal. I would expect that tomorrow you're going to get reversals in those NDX, NASDAQ. That's going to put a clamp on the rest of these indexes, and we're going to get that retrace that nobody believes is even possible anymore. I say that with tongue-in-cheek, of course. Let's go to the sectors. Now the sectors are still set up pretty good, most of them. I'm going to pop to not the weakest ones, but the ones that are showing the potential for some sort of a turn. The SOX is one. Now, just looking at this, you wouldn't think it would turn, but like most of these, they've finished off, more than finished off ABCD structures to the upside. They had big moves down. Now they're coming straight back up. Angle of ascent is steep, right? All of these things matter. And as you come back up with an angle of ascent that's steep and you come back into an area, that definitely should give you some problems. I would expect that's where you'll get the problems and get some sort of a pullback. So the SOX, even though it doesn't show a reversal, it did come into a swing point high. Well, actually, maybe it did. I didn't think it got over it. 86.23. Yeah, it didn't. It didn't get over the swing point high, so it was coming into a swing point high. It doesn't get over it, right? So it doesn't really have a technical reversal yet. If it gets over tomorrow back under less volume, then it would. But it's ready for a pullback. Another one that's ready, and actually may get a little bit more extension, but is certainly weak, is the XLE. XLE is coming in this swing point high, trying to test at 97.70. Oh, it did tonight. It got over it. So that's a failure. That's a technical failure too. The last I looked today, it hadn't gotten over it. So you get over this high, right? You got less volume, right? Test, failure, back the other way. And this also happens to be finishing up, it looks like to me, probably an ABCD structure. Let me get the right tool here. Looks like it had an ABCD structure here, down to there. Yeah, actually, it should have completed farther. A little bit farther up, somewhere up here. So, coming into it, swing point high, fails. That one is technically a reversal, wants to come back the other way. That was the other weak one. Another one that may and has been the bull here lately, and you see it in the Dow Jones, is the XLI. XLI comes into an area doing a retest regen, one of the few still weak enough to be doing a retest. So it comes in, does a full retest regen off this breakdown bars swing point high. Excuse me, the high of the swing point low. Test almost to the point. Let me see what that number was. 53.98, got to 53.90, and has less volume. That should flip around, come back. And I believe that was the only other one. XLP, XLU still kind of neutral, but everything else looks like they can push higher still. So you've got roughly 4 or 5 indexes or sectors that are set up to try to come back in now. And then you got about a handful on the other side. And so if you think about it, you got about an equal number of sectors showing signs of wanting to try to come back. You've got an equal number of indexes doing the same. The dollar stronger, that typically is not good for equities over time. Right now it's not an issue yet. And then what else is there real quickly? It's the general markets overseas, the overseas markets. And there, and I know I'm running over on my first piece of this show, but there you've actually got 2 things happening. Europe can't get over the highs, and I'll just pop through them here and show them to you. Here's the CACs, can't get over the resistance zones, I should say. The DAX doing the same thing, can't lift, right? And then you go over to China, the 8 shares can't get back to the highs. And all of the Hong Kong shares are definitely over the highs. They did a doji today. And so when I look at these guys, that suggests to me that they too are going to try to pull back in. And I suspect that's going to lead to some sort of a pullback in our markets tomorrow. Okay, that's it for the summary. Let's pop over and look at your questions. And again, if you're a little late into the show here, you can text them 303-912-9110, or you can email them in at support@TA Today. If you have a login on live stream, which is easy to get, if you don't have one and you come in live, you might as well get one. Then you can simply type them in on the command line. So let me take the first one that was emailed to me today and see what this is and what they're trying to do here. So the question is about Hess, which is a oil services stock, and this gentleman wants to get into this guy. He wants to know what price and what the target price sell would be. And as I always try to remind you, if you can, please give me your time frame as well, because it makes a big difference as to what the analysis is, right? It's not just about price in and out, it's about time as well. Let's pop to Hess here and see what we got. Okay, so Hess does a high volume, this was earnings, does a high volume spike on earnings. It comes straight back in. That's interesting. So now if I was a classical TA guy, I would be looking at this and saying, man, that sure looks like a head and shoulders, doesn't it? Right? The problem with that is the volume. Right? You don't typically on a head and shoulders, if you look at Edwards and McGee, you don't get low volume here, high volume there. You get high volume here, equal or less volume there, and a lot less volume over here. And so you don't really see that, that pattern. And believe me, I was bred on this stuff, right? I mean, I'd studied classical TA for probably 15 years before I invented my own system. So from that perspective, I don't think it quite matches. Let's look at the weekly. Okay, so essentially what's happening here in my perspective now, in my view, is that you've got a consolidation here and you've got one above it. And until you break out of this one, you can't expect to get to that one. But the fact that you've got high volume on that one suggests that at some point you will go to it. So when I look at this, this becomes the key bar, right? That high, that swing point high, which doesn't have a huge amount of volume, but has decent volume. That's the test. The bottom test is, of course, to start breaking out your swing point lows. If you do that on a closing basis, then that just kind of throws another range down here and says you can go lower. That low on this price time frame is 54. I'm curious where that is over here. Not 54, but 94. I got my cursor on it. 94. Yeah, 94 would take you into there, right into the support zone. So that actually makes sense from a weekly. I like the multiple time frames to match. So the key here, if you want to get in, is to buy the breakout over this bar and expect to shoot up to here and put your stop right up underneath this low, right? Just right up underneath that low. Don't give it any room. So that to me is the buy point, right? So let me give you the numbers. That buy point would be a close over 101. The target's 104.50. Your stop would be right up underneath it, right at say 98 or something, 99.98 or 99.92 or something underneath there. So you're risking basically $1 to try to get 3.5. That's a worthwhile, and that assumes it will stop up here, which is likely. So if you're shooting for a 3-to-1 type reward on a short-term time frame, that makes sense. If you're talking about an intermediate-term time frame, I think this is going to consolidate longer. I don't think it's going to break out anytime soon on that time frame. Next question was sent in on a text. This one had to do with SVXY, which is the volatility, the futures. And let me see what the question was again. Can you give your opinion on this SVXY? I did a weekly put spread. So essentially what he's looking for is volatility to pick up. Well, put spread though, you're expecting, let me see, this is the short, yeah, so he's looking for volatility to pick up, right, and drive this thing higher in, well, this is a short though. So if you're on a put though, you're wanting it to come lower, although you spread it to control your risk, and it's a weekly. You still may be okay. I don't expect. This is probably actually a good trade. I don't expect you're going to see volatility pick up that much, because I think the pullback is going to be contained, and if that's true, and expecting that pullback to come within the next day or two, and as we saw over on the not the Russell but the NASDAQ, it's probably just going to come back to a retest regen, and then it's probably going to, I would expect what you're going to see, and I'll just use this chart, I expect you'll see some sort of a pullback on the markets, which will push this back up some, right? But then those markets to find support, which is going to pull this, this is just not going to go anywhere probably. So you'll probably make money on it just because the market's so bullish, and it's probably going to head back up before it gets any kind of significant drop. And so your volatility just isn't going to pick up. So I think that will probably work. Let's see if we get any more questions. No more? All right. So, tomorrow I would expect some sort of a retrace, some softness in the NASDAQ and the NDX. And then after that, we'll see how far it wants to carry. And, does volume pick up as it comes back? I doubt it will, because you've got two events coming at you now that's probably going to contain this thing. They're unknowns, and part of that pullback probably is a result of those. I thought it might happen today with the Fed meeting, but you've got PMIs that are coming out tonight overseas, tomorrow overseas, here domestically, and then you've got you've got the Yellen, Draghi speeches on Friday at Jackson Hole. Everybody expects those numbers, economics numbers, to be strong. Everybody expects those speeches to be very conducive to more easing or interest rates not rising, all of that. So the expectations are already built in. If either of those disappoint, if those economic numbers are not as strong as expected, or if Yellen or Draghi or something comes out of that Jackson hole that's a surprise on the negative side, then this market's going to struggle, and then you're going to see it pull back. But I can't believe that you're going to hear that Friday, and it really comes down to these economic numbers tomorrow, and more than likely they're going to be almost in line, maybe a little negative if anything in some of the markets, especially Europe. But Europe is expected. US, China, so forth, they expect those to be strong still. All right, I'm going to leave it at that. Thanks for joining me. Have yourself a great night. I'll see you next time. I'm LA. This is, and it was, your daily NeoTA wrap. Have yourself a great night, and I'll see you on the program tomorrow. Take care, folks. Good night.